3. Overestimating their own abilities. Most investors believe they're smarter than the market. They think they can time it perfectly, picking the exact moments to buy and sell. But the truth is, even professional fund managers struggle to beat the market consistently. Studies have shown that over 90% of actively managed funds underperform the S&P 500 over the long term. If professional investors, with access to the best research and technology, can't consistently beat the market, what makes the average investor think they can? The overconfidence bias leads people to take excessive risks, trade too frequently, and ignore valuable risk management principles. The solution: humility. The best investors understand their limitations. Instead of trying to outsmart the market, they focus on long-term wealth building, diversification, and risk management. 4. Ignoring risk management. One of the biggest reasons most investors fail is because they don't properly manage risk. They focus too much on potential rewards without considering what happens if things go wrong. A common mistake is putting too much money into a single investment. If that investment fails, their entire portfolio takes a massive hit. Others fail to use stop-loss orders, hedge against downturns, or maintain an emergency fund to protect themselves during tough times. Risk management isn't about avoiding losses altogether, it's about making sure that when you do lose, it doesn't wipe you out. The best investors always consider the downside before making a move. 5. Short-term thinking. Most investors want quick results. They see investing as a way to get rich fast rather than a long-term strategy for building wealth. This leads to constant trading, chasing the next big opportunity, and making emotional decisions based on short-term price movements. But the wealthiest investors understand that success takes time. Warren Buffett famously said, "The stock market is a device for transferring money from the impatient to the patient." Those who focus on long-term wealth accumulation, compounding returns, and staying invested through market cycles are the ones who achieve financial freedom. If you want to be in the top 1%, shift your mindset from short-term gains to long-term wealth building. Play the long game, and you'll be far ahead of most investors. How to be in the top 1% of investors. Now that we've explored why most investors fail, how do you rise above the crowd and join the top 1%? Control your emotions. Make decisions based on logic, not fear or greed. Develop a system and stick to it. Have a clear investment strategy. Choose a method that aligns with your goals and master it. Recognize your limits. Don't assume you can beat the market. Instead, focus on consistency and sound principles. Prioritize risk management. Protect your wealth by diversifying, setting stop losses, and maintaining a safety net. Think long-term. The best investors don't chase quick wins. They build wealth patiently over decades.